If you're looking to make it big in the crypto markets, you might think your success story should look like this.
How he went from being broke to being a young millionaire, and he claims that he did it all by investing in Bitcoin.
Every single one. It didn't matter which one you bought, it just went up.
I'm sitting in this bed, in the studio apartment, and I just became a millionaire.
Crypto has a new millionaire.
Well, unfortunately, I'm here to tell you that you have absolutely no chance of becoming wealthy this way. I know, we just saw the news stories and the headlines, but I will tell you from personal experience that what is easily made in a day is just as easily lost the next. Most crypto millionaires end up giving their gains completely back to the market. Why? Because they didn't earn them the right way. True wealth is accumulated slowly and is the result of strategic decision-making, discipline, and patience, not degenerate gambling. Yes, of course it's fun and exhilarating to ape into the latest meme coin. And I'm not telling you that you can't have that as a tool in your tool belt, but not for the majority of your capital. I like to ape into the latest Solana meme coin like anyone else, but I do it with 1% of my portfolio. And I do it telling myself that I will almost certainly lose money on this trade. Well, darn, Justin, aren't you just the Debbie Downer? Do you have anything positive to say? Yes, I do. So glad you asked. In today's video, I'm going to share with you the real strategies and techniques I've used to achieve success in the crypto markets. This is going to be the raw, unfiltered truth from a trader with over a decade of experience in the markets and who's been actively trading crypto since 2016. I'll tell you what worked and still works, what worked and no longer works, and what definitely didn't work then and won't work now. So if you're ready to stop buying the top on meme coins that have already pumped, and you're ready to learn how to grow a real account, let's get cracking. Please subscribe to my channel and hit the bell icon too. Welcome to the CC family. Now, the first thing you should know about accumulating real wealth in the... Whoa, man. Hey, easy there. I'm trying to record here. You can't just be popping out here with that face. Sorry, Justin, but when you're a billionaire like me, you can do whatever the hell you want. Facts, man. So how did you do it? Did you ape into the most promising tech stocks? I bet you are all in on all the latest AI assets. No, Justin. I made my wealth slowly over time, following the fundamentals and staying true to my own investment strategy. Oh, but isn't that boring as heck? You're goddamn right it is. Boring is what makes the big bucks. Bye, Buffett. Listen, guys, do you think Warren Buffett made his money aping into Solana meme coins or aping into the most promising AI stocks? Absolutely not. You heard it from the man himself. And that leads me to point number one. Successful trading can seem kind of boring. Trading, like anything else, requires practice, discipline, and adhering to a set of rules. It's a process. And once you nail that process down, you just rinse, wash, and repeat. Most people think that I or other successful traders are just constantly watching the charts, analyzing 90 data points simultaneously. Something like this. But that's not trading. That's not what trading is really like. Trading is about developing a strategy, understanding the fundamentals, understanding where we're at in the market cycle, and taking reasonable positions in line with your analysis, strategy, and how much money you actually have. Now, this is exciting for the first 10, 20 times that you do it, but then it becomes a process like brushing your teeth, combing your hair, taking the trash out, doing the dishes. What keeps it exciting is watching your account grow from week to week, month to month. And I'll be honest, there's nothing quite like the cool or badass feeling, if I may, of being a profitable trader, of knowing that you only need a laptop, an internet connection, and your own mind to make a profit. Not relying on any company, person, business, government, anything. It feels like true freedom. gets me every time. Next, you need to focus on long-term wealth creation rather than overnight success. Successfully building a trading account is a marathon, not a race. Set realistic expectations about how much you plan to make in a given month, quarter, or year. Most people who only trade crypto don't have much experience trading stocks or Forex, and as a result, they tend to have very unrealistic expectations about at what a good profit margin is. Getting 20 to 40% on a trade is hitting it out of the park, like Sammy Sosa, all right? If you can repeat that 10 to 20 times a year, you will be well on your way to turning your trading side hustle into a lifelong profitable endeavor. It can be hard in crypto to maintain this mindset, especially when every news article, Twitter post, newsletter is just obsessed in throwing in your face this concept of 20, 50, 100x gains. To counter this, pay close attention to what information you're taking in. There are high quality news outlets out there and good people to follow on Twitter and Telegram. Just make sure you're not following the Moon Boys. They will often lead you astray. I prefer my market analysis with a dash of sobriety, not hopium. Next, understand what type of trader you want to be. Let me tell you from experience, you cannot be good at everything. You need to pick a lane and stay in it. The riches are in the niches, which means the more you niche down your skill set and become an expert in that little particular thing, the better you will do and the more money you will make. This is true in trading, and it's true in every other aspect of life. This is why surgeons make much more money than general doctors, and why you will make much more money with one strategy versus 10 strategies. There are 3 main types of trading, and you need to pick one and stick to it if you want to see long-term success. First, you could be a positional trader. Anytime you hear someone in crypto talk about an investment, there's a 99.9% chance that what they're really talking about and doing is positional trading. An investment is something that you plan to hold typically longer than 5 years. And usually when I'm saying investment, this is something I want to pass down to my kids. How many cryptos do you feel comfortable holding for 5 years? You want to see it go all the way up, come all the way down 4 or 5 times? No, you want to buy low and sell high, and you want to make money. In a general crypto cycle, that's anywhere from a 1 year to 2 year holding period. And that's if you buy the absolute bottom, which you probably aren't going to do. Most of the successful positional trades I've had have lasted 3 to 6 months. That's not an investment, it's a trade. So stop calling yourself a crypto investor and recognize that you're trading with a different time horizon than the hourly chart. If you want to be a positional trader, well, buckle down because it is the hardest style of trading to do. It requires doing a massive amount of research, sifting through the tens of thousands of coins out there to pick a small handful of potential winners, patiently waiting months, if not years, for the optimum buying opportunity, and then holding that position and that conviction for an equal amount of time. While you're holding those positions, you're going to see lots of other coins that you're not invested in pop off overnight or over weeks. And the biggest mistake you could make is exiting your positions to chase those winners. Positional trading, however, does offer the highest profit potential, but it comes at a big cost. You have to take big positions up front and also usually keep capital on the sidelines to add to your winners once they start to run. It requires immense patience, discipline, and emotional self-control. For these reasons, I don't generally recommend newer traders to go down this path. It takes a long time to build a track record of wins under your belt with this type of trading, and most people I see go down this route end up failing, generally due to not being able to follow through on their conviction and be patient. But when successfully done, it can allow you to, as we want, buy low and sell high. But again, understand that being successful here means holding on to your conviction and your positions for long enough to make the wait worthwhile. This is generally not for somebody who wants to trade full time. And this is best, in my opinion, for those who already have a full-time job and just want to be more active with their investment portfolio on the side. Having said that, it does, of course, require an immense amount of time and energy, at least in the asset selection and positioning process. Once you've picked your winners and entered your trades, you can pretty much just sit back and wait for months. Warning, remember that if you successfully time a cycle and you end up cashing out, you will likely be near or at the end of the market cycle. And the biggest risk you will face then is wanting to stick those profits back into the market. In general, this is a big mistake. You need to wait another year or two for prices to come back down before getting back on the roller coaster. The other style of trader is the day trader. As a day trader, you will be focusing on opening and closing positions within the same day. Sometimes you'll let a trade run overnight, but almost always not longer than that. Being a day trader is what most people think of when they picture trading. 10 screens, rapidly trading, quick decision making, all of that. Now, I've written a lot of material that is pretty critical of day trading for good reason. Again, most day traders fail. However, if you go into it with your eyes wide open and accept the limitations of day trading and put strong and strict rules in place, it can be a successful endeavor when the market is hot. The biggest mistake I see day traders make is trying to turn their day trades into swing trades or positional trades. And this is the opposite of staying in your lane. This is trying to be the jack of all trades and almost always leads to losses in the long run. As a day trader, you need to learn to be content with 1% to 3% price movements. That's what you're aiming for, which means you're going to take a trade, take a profit, and then more often than not, watch that token run up another 20 or 50% potentially over the next few weeks. Most people can't handle that, or they end up trying to chase that, generally failing to do that. You're day trading, which means you just need to focus on getting 2 to 5 winning trades per week, focusing on that 1% to 3% profit margin and repeating that over and over and over again. Now, with that said, there are benefits to day trading. When developing a trading strategy, you can get a lot of data very quickly because you're trading so frequently. So you can quickly validate or invalidate a potential trading strategy. Day trading also offers the opportunity to utilize multiple strategies depending on the market conditions. When I day traded in the past, I had a strategy for bullish markets, range-bound markets or neutral markets, and bearish markets. Each strategy does well when I use the right one in the right situation. And one of the benefits of day trading is that you can kind of ignore the overall trend to a degree. There are going to be, even within a bull market, there's going to be neutral days, bullish days, bearish days. And so you kind of get the opportunity to be a little bit more active, and this can be a little bit more exciting and fun. There are lots of people who recommend learning the fundamentals of trading via day trading because you get so many trading opportunities. And for those with strong discipline and emotional self-control, it could be a good avenue. Unfortunately, nowadays, those are skills that most of us lack. So for that reason, I often don't recommend this style to most new traders. Finally, there is swing trading. As most of you know, this is my niche and what I consider myself an expert in. Swing trading involves using meso or higher time frames like the 4-hour up to the daily, sometimes weekly, to analyze the big picture of market moves and trading in a way that tries to capture those major movements or swings of the market. Trades are often held for several days, if not weeks, and are sort of the middle of the road between day trading and positional trading. I really enjoy trading on the daily time frame, which allows me to structure my trading around one trading session per day, meaning I'm not constantly in front of the charts. Signals are much less frequent, but when they do occur, they tend to be much stronger. And it gives me plenty of time to analyze a potential position and make sure I'm in a good state of mind to be trading in the first place. Of course, there are downsides to swing trading. Just like when day trading, you'll capture a 3% profit and watch that asset run another 20%. When swing trading, you'll often capture a 20 to 40% movement, take your profit, and then watch that token 5x over the next 6 months. And it is what it is. While this might sound crazy to you to leave those gains on the table, there is always a much higher chance that the price of something will plunge rather than 5x. And I have learned the hard way to take my profits when I reach my profit target and then move on to the next trade. I'm always looking for that sweet spot, 20 to 40%, rather than try to turn a swing trade into a positional trade. Trust me, I spent 3 years flopping around trading full time before I was really able to turn a profit. And one of the main reasons for why that took so long was because I refused to just settle down and trade one style, one strategy. I kept going from day trading to swing trading to trying positional trading and coming back again, swapping out one indicator for another, one strategy for another, joining different groups. It was a mess. Things I'm sure you can all relate to. Once I realized what I've just shared with you, that in order to be good at one style of trading, you have to forego the other styles and stay within your lane, that's when the game changed for me and I became profitable. It was a tough lesson to learn and a hard pill to swallow, but it was the truth, and it's the truth I'm sharing with you today. Once you've settled on what style of trader you want to be, you have to build a trading strategy. Any serious trading strategy is going to outline for you your entry and your exit conditions, how much to risk per trade, which means what size of position to take, and what signals to avoid. This strategy is going to be your roadmap, allowing you to stick to your plan even when your emotions run high. Now, building a trading strategy is time-consuming, difficult, and often frustrating. But once you do it, it will work better than anything you've ever tried before. I've spent hours testing different indicators, entry methods, trying different charting softwares, and countless more hours back testing these different strategies, and I documented everything. And that allowed me to see in black and white what worked, when it didn't. And with that data, I was finally able to just pick something. After you've chosen a strategy, just stick to it. Document your trades, monitor the performance of your strategy, and don't do anything else. Just don't do anything else. Just do that one thing just do it. Just do that one thing and do it over and over and over again. If you have a good strategy, you will get good results. If you have a bad strategy, you're going to notice right away from your trading journal, from documenting your positions. Most traders fail, not because their strategy is bad. Hell, the RSI is a good strategy. Just put that one indicator on your chart, trade it. More often than not, if you do that consistently, you can make money. Most traders fail because they cannot stomach doing the same thing over and over. They want to get rich quick, have instant gratification, and have fun. And trading can be fun when you're making money. But until you've done something for 100 hours, you have no idea how to even do it poorly. You have to put the time in. 1,000 hours to become an expert. And I highly recommend putting that time into building a strategy rather than putting that time into flopping around in the market, doing random things just like I did, and getting random results over and over and over again. Please learn from me. I have done all that mistake making for you. I've blown my accounts. I've lost it all. I've made it back again. And I'm telling you, boring makes money. Strategies make money. Following influencers' calls generally doesn't. So, with your style in mind and your strategy under your belt, and you're ready to trade, you have to keep a trading journal. I cannot emphasize how important my trading journal has been to me. It is one of my best friends. I write in it every day. However you want to do it. I mean, nowadays there's all kinds of software-based ones that will even link to your exchanges and even your wallets to track DEX trades. But don't just automate it, because if you do that, you probably won't use it very much. I see most people hook up a journaling software to their exchange and then they promptly forget about it. Me, personally, I really prefer a physical notebook. Maybe I'm just old school, but it makes me more attached and connected to the journaling process. And for me anyways, makes it easier to go back and look at my trades, my thoughts, my decision making, and that allows me to see where I'm doing well and where I need to shore up weaknesses. Trading is all about statistics and emotions, and keeping a journal allows you to collect the data you need to calculate your statistics, and also allows you to not only keep track of your feelings, emotions, and decision making, but gets you more in touch with them as well. On a personal note, there's another reason I really like keeping a physical journal. Like, for example, it's nothing fancy, but here is a Bitcoin short that I took earlier. I mean, this is just basically what they all look like. I just write down the asset and what direction I'm trading in, what time, what signal generated it, the volatility of the current market based on my own matrix, the position size that I took, any notes that I have about the trade, and then my TP and SL. And then when the trade is concluded, which this one's still open, I will put those notes down here at the bottom. And this process of actually having to pick up a pen and pausing before I do this before I enter a trade. Before I enter a trade, forces me to just take a second to really write this all down. And as I'm writing this, you would be surprised at how often I'll sit down to journal a trade. Like I see a signal or I see a potential trade, and I'll sit down to start journaling it. And as I'm starting to fill in my notes, I will realize that I should not really be taking this trade. This isn't in line with my strategy. What am I doing? Okay. And that's another reason I really enjoy the physical process of writing in a physical notebook, a physical journal. It helps me curb my worst impulses. For anyone who wants to be serious about trading, a journal is an absolute necessity. Finally, if you want to have significant success in trading, you have to keep track of your emotions and master your trading psychology. As I've already said throughout this video, trading is more about emotional self-control than technical analysis. Most traders fail not because they can't trade, but because they cannot manage their emotions and end up making common trading mistakes like FOMO trading, revenge trading, over trading, over positioning, jacking up their leverage, getting loss aversion. The list goes on and on. Only trade if you're in a good state of mind, and having a generally healthy lifestyle can really help ensure that you do. Now, this isn't meant to be a sermon, but I highly recommend reducing or even quitting alcohol or drug use, making sure that you are in a good and stable relationship or that you're single, having a good network of family or friends, regularly exercising, and maybe even meditating or doing some yoga. These things will, I promise you, make your whole life better holistically, but they'll also help you to regulate your emotions, your hormones, everything, so that you're able to make better, quicker decisions, be more in touch with yourself, and be less susceptible to impulsive or rash decisions, which when trading are often what lead to significant losses. Thank you so much for watching all the way to the end of the video. We have a massive trading competition going on Fairdesk right now. So big shout out to our exchange partner Fairdesk for putting this competition on for our subscribers. There is a huge reward pool, up to $50,000 max rewards per person who participates. Plus they're offering cash back of your P&L losses. Yeah, that's right. If you lose money trading in our competition, you can get a lot of it back. Your daily trading fees will be rebated to you. And during the duration of the competition, you will also get VIP level 6 fee discounts, up to 37.5% of your trading fees off for the duration of the competition. It is live for the next 2 weeks. All you need to do is sign up to Fairdesk. If you haven't done so already, there is a link in the description. That link will also take you to this competition page. After you've created an account, there will be a button here to click, says participate. Just click that button and that's it. You can choose to trade or not trade. The competition will apply and those benefits will apply to all of your futures trading and copy trading positions. So even if you don't want to compete, try to get on our leaderboard, just sign up for the competition and get that fee discount for the next 6 weeks and just trade normally. You never know. You might win a couple $1,000s. Again, the link is in the description, and thank you to Fairdesk for putting this competition on for us and continuing to provide Americans, Canadians, and those in other crypto restricted countries with access to a KYC and VPN free futures platform. We are also launching our crypto trading academy in 2 weeks. And as a sneak peek here, you guys can see I absolutely called today's movement for our Academy members. I posted this 9 hours ago in our quickfire feed in our alpha community. This is the community of the Trading Academy, calling exactly where price would go, sweeping the long liquidations in the 67 to 66.5 range. And then about 3 hours ago, I posted the update pointing out how we called that price action, and the shorts that we had called out earlier were absolutely printing money. This is what you can expect as an Academy member, getting access to not only institutional grade research, analysis, and education, but also getting the opportunity to network and grow with a community that is dedicated to strategy and wealth creation. The sign up link for the launch waitlist is in the description. We will be giving away free and discounted seats and free mentoring lessons to some who get on that waitlist. So definitely get your name in the hat. As always, emotional discipline and risk management pay my bills, and I recommend letting them pay yours as well. Trade safely, and I'll see you in the next one.